Welcome back to the channel, back to Market Hawks, where we stalk the market. It's your boy Ed, where you come to get your financial gain so they can stop running a financial train on you. Well, we have several things we want to talk about, but today we want to talk about the basics of how stock markets work. And we are not giving you financial advice, we're just giving you information that could change your life. Now, a lot of people always want to know how stock markets work. Stock markets can be very sophisticated and complicated, but if you slow it down and you break it down, you can have a good understanding, a profound understanding of how it works. Stock markets. When you come to stock markets, they can be complex, but usually when stocks start off, we have two components. You have the primary market and you have the secondary market. What is the primary market? The primary market is where companies are still private, and the only people that have access to their shares are actually pretty much the people that work within the company. You can see the employees or the insiders. Then you have accredited investors. Accredited investors are usually people with a net worth of $1 million or more. They're highly connected, and you might as well say they're highly favored because they're in position to get the private shares. And you have institution investors. These are the people that usually have the access to the private market. The private market is a very affluent place for connections. Sometimes on Wall Street, they will say more money than God. Why? Because when you're in the private markets of the primary market, you have an investment that is guaranteed but not guaranteed. Hear me when I say that. Your investment is guaranteed but not guaranteed, because investments are never guaranteed, but you're almost guaranteed to attain wealth because you're getting shares and securities at such a low price beyond the actual secondary market, you almost can't lose. Then you have the secondary market. What is the secondary market? This is when companies decide to go public. You will have them launch an IPO, initial public offering. Initial public offering is usually when investment bankers come in, they do the underwriting, they do the shares, they get them distributed properly where they're supposed to go. This is when these companies go from the private market of the connected, the affluent. The shares are not being traded on a public exchange, they're privately held. Now they're going to the IPO. The IPO is the initial public offering, meaning that it goes to to the secondary market where the public can begin to buy. Usually when these companies hit the secondary market, that's when you really see the shares become very liquid. They begin to fluctuate. They begin to be being bought by the public. And that's a lot of times when the primary market make a lot of their money because they cash out from the primary market and let the secondary market buy the shares. Sometimes I call it a cash out mechanism, but we'll get into that another time. But where the secondary market is, that's where the public gets a chance to be able to buy shares, meaning that it goes on to the New York Stock Exchange and the NASDAQ Stock Exchange. When it hits these markets, you have several players. The players in these markets is you have the market maker. The market makers are the financial institutions that create liquidity for the market. They usually buy the shares that no one wants, or they make sure there's no gaps in the market, meaning that when you want to buy, they'll step in, buy the shares, sell them to you. You want to sell, they'll step in and buy the shares off of you so things can move fluently through the market, because they need the markets to flow so your wealth can grow. Now, then you have the traders. Then you have the investors. What are the traders? The traders look for quick moves significantly in their favor. The stock can appreciate in a short period of time, and one little move, they take a profit. The stock can depreciate, goes down. If they're betted right with the stock wanting to go down, they pretty much benefit. So they're looking for moves here to there. Then you have the investor. The investor is the person that is fully committed to this company, and they're looking for long-term appreciation, compound interest on their capital. That's what the investors are. So you have the market maker, The market maker, they usually come in and you'll have the bid and the ask. The bid is the investor is willing to pay the most, or the trader. The ask is where the investor is willing to pay the least amount. So you have the market maker, you have the trader, and you have the investor. These three begin to get together in an event, and this causes markets to move. Now, a lot of people want to hear about DeepSeek. I understand that. DeepSeek was a major event in the stock market a day or two ago, and it caused the American stock markets to wipe $1 trillion out of the market cap. DeepSeek is a Chinese app, and this is supposed to be equipped with all of the same components and technology and artificial intelligence, just as ChatGPT that OpenAI has created. And what they're saying is that DeepSeek has been made with a competitive advantage. It took $6 million to make this particular app, where it took over couple $100 million to make with ChatGPT. Now, when you're dealing with Chinese companies, they can be profitable, but you really, 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 really have to be careful, because it's a lot of loose regulation. They're becoming a developed nation, or mostly not fully developed. So they tend to cook the books often. Don't get me wrong. You can find companies over there that are very profitable. And what I always tell you investors, and all of my people that follow me and looking at Market Hawks, we always say, daytime smoke makes nighttime fireworks. What do we mean by that? What we mean is what's done in the day that is seen is not where the power lies at. People that walk around, show their money, hey, they may have it, they may not. They may not have it. But the people that's making money that you don't see is the nighttime smoke. There's nothing more powerful than long-term compound interest. So when we look at DeepSeek, DeepSeek supposedly had the competitive advantage. They took what OpenAI did and made it for less. So the markets caught shockwaves behind that, because they got a little scared that, oh, they can do this for less, so we can produce this, we're overpaying for this. But do your investigation, look into that. Me, I wasn't worried. It was a buying opportunity for me. Why? Because I knew that it wouldn't last long. Not saying that DeepSeek is not the real deal, but I had my experience with Chinese companies. They will cook the books, and they will give you a pump fake and have you thinking something is what it is, that's not, because the regulation is very loose. I will not bet against the NVIDIAs. I will not bet against the Broadcoms. I will not bet against the Magnificent Seven. These dudes are loaded. They have the money that they say in a term on Wall Street, more money than God. And these guys know what they're doing. They are world-class leaders. That's what they are. When I say world-class leader, they are of the best. They have the best material. They have the best people, and they are absolutely qualified. And I always tell people, because you lack this, and the reason why you're stressing, because you are working more than you invested. And you have to get your mind clear and begin to understand investing is where it is, and make this your year. Because these next 4 years will be very, very, very important.